Hello, accountants. Hello, accountants. My name is Rant Kashweka. I actually do online lessons for financial reporting, management accounting, cost accounting, and financial accounting. And we also do Pastel and Excel lessons where we literally give a Pastel software to our students to install on their computer for learning purposes. Okay, our lessons are actually very much cheap. They're very affordable, and yeah, they're very insightful too. Uh, and they are even more detailed. They are actually recorded, so students can access them anytime when they want to watch them. Okay, so today I wanted to do a brief summary of leases according to International Financial Reporting Standard number 16. Okay, so let's start with a scenario. Let's start with a scenario. Okay. Let's say, how about we start with the definition instead? So a lease is like, let's say, renting something big, like a car, office space, or equipment, but for a long time. Instead of us buying it outright, you agree to pay for its use over months or maybe over some years. Okay. Think of a lease like this. Imagine you run a business and you need delivery vans. So buying them is too expensive for your business. So you lease them for a period of 5 years. So under International Financial Reporting Standard number 16, you must treat this lease as if you bought the vans using a loan. The vans are recorded as a right of use asset. Okay. So that right of use assets is going to show on your non-current assets in your balance sheet, and you'll be depreciating it, by the way. And then the total lease payments you owe are recorded as a lease liability, like a loan that you must repay. So it will actually increase your liabilities figure. Every month, you recognize an interest expense on the liability and you reduce it as you pay. So basically, there are three main things that we have to consider when we are looking at leases before we even talk about types. Firstly, the leased asset, which will be recognized as the right of use asset. It will be under the non-current assets in the balance sheet. Secondly, the total lease payment you owe are supposed to be recorded as lease liabilities in your balance sheet, increasing the liability. And every month you recognize an interest expense on the liability and you reduce it as you pay. Okay, so when it comes to leases, firstly, it's practically a contract between two individuals. Okay, so it's a contract between two parties. So the two parties are a lessor and a lessee. Okay, the two parties are a lessor and a lessee. So a lessor is a person like, let's say, for instance, the landlord or the owner of the asset that you have acquired. Okay, so a lease is a legally binding contract between a lessor and the lessee, whilst the lessor is the landlord or the owner, and the lessee is the tenant or the renter. Okay, so a lease is more like a rent agreement between the lessor and the lessee, where the lessor is the landlord and uh, the lessee is the tenant. Okay, so when it comes to the types of leases, we have two main types of leases. We have an operating lease and we have a finance lease. An operating lease is a short-term lease, usually less than the asset's lifespan. The lessee doesn't own the asset at the end of the lease. It's actually common for office spaces, vehicles, and equipment rentals. An example can be renting an apartment for a year. Whilst a finance lease is also known as a capital lease. It's actually a long-term lease where the lessee assumes most ownership risks and rewards. At the end of the lease, the lessee may own the asset. It's used for business assets like machinery or buildings. An example can be a company leases trucks for 5 years and owns them afterwards. Okay, So basically, that was just a summary of the theory part when it comes to leases. So in short, there are a few things that we're supposed to understand. We're supposed to understand what a lease is, which is a legally binding contract between a lessor and the lessee. I've explained those two terms already. And we're also supposed to understand how to treat the asset, the right of use asset. That's the asset that has been leased. Okay, and how to treat the lease liability, and also how to treat the implicit interest. Okay, so I've actually explained those. For more detailed explanations, and if you have any questions, you can just contact the number that I'll put in my description, and I'll be able to explain everything in details. Or you can simply join our classes. You can join our classes where we'll actually solve some many questions on leases and anything pertaining to leases or anything else in financial reporting. Okay, so those are the terms that we're supposed to understand in summary. So what I'm going to do today is I'll solve a question which is under leases. So the question is this one. Okay, so it's financial reporting, September 2023. And I'll go to question 2, and then on question 2 they've given us a trial balance. This is a Zika past paper, by the way. They've given us a trial balance, and the first additional information is on leases. So we'll solve this one and connect it to the explanation that we've given you on leases. Hopefully it will be easier to understand. Okay, so if we were to look at the trial balance, you will notice that we have a lease rental of vehicles. That's 12,500. Okay, so we have a lease rental on vehicles, 12,500. And then in the additional information, they're saying Timber PLC entered into a lease contract for a motor vehicle on 1 April 2022. The lease rental in the trial balance is the initial payment made on 1 April 2022 for a year lease. The lease agreement requires 3 further annual payments of 12,500 or 12.5 million each in advance. The present value of the remaining lease payments was 37.5 million at 1 April 2022. The interest rate implicit in the lease is 10% per annum. So what we are supposed to do as per this question, firstly we'll have to find the initial measurement of the right of use asset. Our right of use asset as per this is actually the motor vehicle. Okay. Yeah, our right of use asset is actually the motor vehicle. As you can see, they're saying Timber PLC entered the lease contract for a motor vehicle on 1 April 2022. The lease rental in the trial balance is the initial payment made on 1 April 2022 for a 4-year lease. So first we'll have to find the initial value of the motor vehicle. How do we do that? Okay. For us to find the initial value of the motor vehicle, we'll have to firstly get the initial measurement of the motor vehicle as at 1st April 2022, which is the present value of the remaining lease payments was 37.5. So this is the 37,500. So initial, or let me just say present value of lease asset is 37,500, and we have a rental payment that they made already, which is 12,500. So if we were to add these two, this is kwacha, by the way. If we were to add these two, um, if we were to add these two, yeah, if we add these two, we'll find the initial lease value. Okay, the initial lease value. So basically, the total value of the lease when we were starting everything is about 50,000 kwacha. Okay, so now what we are supposed to calculate for is actually the liability, because the thing is we already know the value of the asset, and we'll have to calculate depreciation. Obviously, if we are to calculate depreciation, if we check in our question, they are telling us that the lease rental is the initial payment for a 4-year lease term. So if we were to calculate depreciation, our depreciation will be our depreciation will be the 50,000 value divided by 4 years will be 12,500. That will be the depreciation. But what we want now, we have the depreciation, we've calculated it. We know the initial asset value, we have that information. Now, what we want is the lease liability, the current lease liability. Please note that we are actually in 2023 because the question is asking for uh, the statement of profit and also a financial position ending 31 March 2023. Okay, so what do we do? What we do is we can bring in the initial lease liability. Okay, the initial lease liability is 37,500 because that's the present value as at 1st April 2022. The original value was 50,000, but currently it's at 37,500. So what do we do now? So what we are supposed to do is for us to find the lease liability, we have to add the interest of the lease. So they are saying the interest rate implicit in the lease is 10% per annum. So this is a year. So the interest, which is 10% of this. So it will be 37,500 times 0.1. So the lease liability will be, we add these two, that's the 37,500 plus the 3,750, giving us 41,250. Okay. We also made a rental payment. Okay, a rental payment. Rental payments, we are paying 12,500 as per the equation. Okay, 12,500. This rental vehicles, not 12,500. So that's 12,500 right here, which we are supposed to less. We are supposed to remove it as we pay. And meaning when we remove it, our lease obligation before interest will be 41 minus 12. I'm supposed to add because the other one is negative. Yeah, like this. Okay, and then now we bring in the interest, which we are supposed to add. Our interest will be 10% as per the question. That will be this times 0.1. That's this, and then our lease obligation. Lease obligation will be, this is our lease obligation after interest, will be will be 31,625. So now we have calculated the lease obligation. So we know the value of the assets, which is the 50,000, the initial value. We'll have to reduce it as per depreciation. The depreciation is 12,500. You calculated. How did we find it? Firstly, we just got the present value of the asset, added back the rental to get the value of the initial value of the right of use asset, which is 50,000. Divided it by the lease period, we got the depreciation is 12,500. So in your balance sheet on the non-current assets, as per this year, what we're going to do is we'll be removing depreciation. Okay, we'll remove accumulated depreciation and the current year depreciation to find the carrying amount of the right of use asset. That's what we're going to do. And then when it comes to the liabilities, our lease liability figure that will go there is this, the 31,625. This is the lease liability that will go there. So we have the asset and we have the lease liability. Okay, so this is how you can solve that such a question. If you have any questions, you can just drop the questions in the comment section, or you can simply inbox me on my WhatsApp number, which I'll drop. And don't forget to like, share, and subscribe to the channel. And if you want to join our online sessions, which are more detailed, which are actual classes where we discuss, and they are live sessions and also recorded, and we also share materials and solve a lot of past papers just like this one, you can simply send a message to the same WhatsApp number that I'll drop in the comment section. Otherwise, thank you very much for watching. See you in our next video. Thank you.